Good morning, everyone, and welcome to the Morning Market Report. And please welcome the newest member of the Piper household. This is Gypsy. Our little girl arrived last night, just in time. As the same big gift from her as this gift in the markets that they gave us. It's amazing. And looking at over here, guys, there is a chance we're looking at another 50 basis point rate cut. We're going to be looking at that. We're going to be looking at this. And we're going to be looking at a key level that you need to know about on the charts. If we retake it, guys, I'm all in. We're going to be looking at that and a whole lot more today on Piper Academy. This is the Morning Market Report. Let's get it. Classes in session. Good morning, everyone, and welcome to the Morning Market Report. I am glad to have you guys all here. That's the new puppers. She actually got here earlier than I thought. She slept through the entire night. Did not wake up at all. I even tried to get up and take her out for a little while, and so she could use the restroom like 2:00 in the morning my time. She was good. She did her thing. She came back in, put her in her cage. When we woke up this morning, she was sitting there at the door just waiting, like patiently waiting, didn't cry at all. So great dog, but not or as great as the markets. We'll go with that. She's as great as the markets right now, guys. Welcome here to the Morning Market Report. Guys, we got a lot of stuff to go over and unpack today. We've got a couple of news articles, but most importantly, I got the best co-host in the business. Let's go ahead and bring him up. It is the OC guy. What's up, bro? How you doing, man?
I'm doing fantastic. Just a great day today. That is a beautiful Gypsy you got there. I'm pretty stoked to see you there, and also to see you very well rest. I mean, that was a big deal today, wasn't it?
Yeah, I wasn't quite sure how well rested I was going to be today. So yeah, I'm glad. I'm glad we're doing good. Piper cages his pets. Hey, I don't cage my pets. I give them a secure place to sleep. Safety and security is what I'm all about. That's why I protected my wealth. While we're on the topic of wealth, let's go ahead and get into what we're seeing over here in the news, guys. And then we'll come back and we'll take a look at this Bitcoin chart because I'm seeing some stuff there too. So let's go get in to the news, brought to you by, as always, Decrypted.tax, guys. Check the link below. You will not be mad. You will not be disappointed what he can do for you in the world of taxes and crypto. So when Piper cut, not getting the Piper cut, bro. Let's get in here and take a look at what we're seeing on Fear and Greed, guys. A little odd. This is an odd one. We're actually looking at a 49 on fear right now. So it's weird. I think this is going to obviously change if we continue to the upside, but right now still sitting on fear on the Fear and Greed Index, sitting at a $2.2 trillion market cap. We've added another one on that 10th of a trillion there. Volume up 47.7%, getting good volume here. Bitcoin dominance. This ain't right. We know it's not right. We'll look at the one on the on TradingView. But looking here on the 24-hour bubbles, guys, PopCat, shout out to FTY. It is up 35.3%. It's looking pretty good. SCI up 24.1, Aptos up 13%, TIA up 18. It's looking good. Tau up 19%. Jump down here. Let's take a look at Bitcoin. Bitcoin's at 5.6%. Ethereum is up 5.9% on the daily, but Ethereum's starting to get a pullback this morning. We are starting to hit some levels of resistance, so we're going to be watching those levels, and we're going to go over them. Solana's up 9.1%, guys. Absolutely ripping off in the past 24 hours. XRP's up 3. Dogecoin up 4.2. Toncoin up 3.8. What else we got? Cardano rallied 6%, still far off from its all-time high, though. Avalanche crushing it, up 13.3%. The biggest mover in the top 20, I believe. Yep, absolutely is. Bitcoin Cash up 9.9%. And then Chainlink up 7.9%, finishing up that top 20, though, guys, with Near up 12.5%. Litecoin sitting there, moving the position down, getting overtaken by Near Protocol. So let's look at this economic calendar and see what we had here this morning, because we did get some data that came in this morning. Initial jobless claims. Guys, you know what I think about the job numbers. I think the job numbers are all inflated. They're all fake. They are all BS, but we still have to take them as data when they come in, because that is what the markets, they have to operate with what they have. And what they have is these numbers to go on. According to this, Job numbers were way under what was expected on the consensus and forecast. I'm sure we're going to get revised numbers next week. Coming here, we can see the number of people claiming unemployment benefits in the U.S. dropped by 12,000 from the previous week to $219,000, significantly below that expectation of 230,000, reaching a new 4-month low. Despite this decline, the claim count remained above the averages seen earlier this year, as the U.S. labor market has softened since its post-pandemic peak, though although it remains historically tight. In the meantime, outstanding claims fell by 14,000. That means people found jobs. So we're going to have to look and see what's going on with that. I don't really buy it, but hey, we got to operate with what we have, right? Manufacturing data here, they were expecting it to be down 1% or maybe up 1%. There was a big gap there between that zero. With zero between, previously was down 7%. Came in up 1.7%. You guys know I talked about manufacturing and construction being the health of the economy. It is the health indicator, and we actually see that manufacturing getting a little bit of a move to the upside there. We do have existing home sales. This all coming out of the top of the hour here. We'll come back and look at this, look and see how existing home sales and existing home sales month over month look. And then, guys, today, keep an eye on this. This is at 5:30 my time p.m. This is going to be at 7:30 p.m. on the East Coast. This is the inflation rate year over year and the core inflation rate for Japan. Right after that, about midnight on the East Coast, the Bank of Japan is going to make their decision on their interest rate. Right now, it looks like they're going to have a pause. But if they do a rate hike, because that's what they're talking about, because you can see their inflation's coming up, right? If they do a rate hike and it happens this week instead of December, that is called Japanese carry trade part 2. And then all of this is off the table. We're going back down again. So let's keep that in mind, guys. And remember that. Shout out to BC Port Corp. He just did a Piper Academy membership. So shout out to him. If you guys don't know who BC Port Corp is, that means you're not tuning in early in the morning for Good Morning Crypto with Lunar Beaches and BC Port Corp. That is Blackie Chan, and they have a phenomenal show. I woke up early enough this morning to catch it, and it was really, really good data. You guys have got to go check that show out. It is called Good Morning Crypto. It's right here on Piper Academy. It takes place like 7:30 a.m. on the East Coast, I believe. So it was live when I woke up at 5 because my puppy said it's time to go. But yeah, I'm looking here at that. Keep an eye on that Japan stuff today, guys. Looking at this, guys, let me give this a refresh, see if it's changed. It's 34.4 there. Did it change? Because it's been changing this morning. Yeah, it's 34.9 now. It was 31 when I first woke up. This is the rate hike projections for November now. Guys, they're cooking in a 35% chance of another 50 basis point rate cut. Rate cut. That's the one. 35% chance of another 50 basis point. I think that people think that the rate cut that we got is not enough, and that they are understating the state of the economy. And now, markets and CME, they're looking at another 50 basis points. So it's going to be interesting to see how that all plays out, guys. Matter of fact, let's come over here and take a look at this, because this is the summary from Kabisi letter of yesterday. He said Fed rate cuts interest rates by 50 basis points for the first time since 2020. Fed sees 2 more 25 basis point rate cuts in 2024, folks. 2. We just seen that on CME Group. They're actually looking at another 50. So one Fed governor dissented for the first time since 2005 in favor of a 25 basis point rate cut. And then the Fed gained greater confidence that inflation is moving to 2%. I don't know where they're getting that data from. They haven't been shopping, evidently, at Albertsons. Fed will carefully assess. Can I buy an S, please, Alex? Incoming data, or Pat, it's Pat Sajak, sorry. Incoming data and evolved the outlook. Fed sees 100 basis point rate cuts in 2025 and 50 basis points of cuts in 2026. The long-awaited Fed pivot has begun. However, I want to show you what's on this other post here. Let's go back to post. Let's go back to my bookmarks, because this one's interesting, and it's here we go. Forecasted rate cuts. We just talked about this. 2 more 25, but they're actually looking at higher ones there. People are, but this is the one. There it is. This one right here. get you up there and pull you up so I can get the whole string. There we go. Whole thread running here. The Fed is making its worst policy mistake since 1929, and this is not going to end well. This is from Game of Trades, and he's got this whole thread here talking about all these recessions going back to 2020 at the very beginning there, and moving in through 2024, 2028. Okay. This is not 20, I'm sorry, 1920 forward. He says the Fed has maintained steady interest rates for the past 12 months. This last happened right before the 2008 financial crisis. Okay, so there's one key piece. Back then, Fed Chair Ben Bernanke expressed regret for not cutting rates sooner. Okay. And I think that's what we're actually going to see with Jerome Powell. He should have been cutting rates in July, in my opinion. I said this back then. Prior to the financial crisis, the Fed kept short-term rates above the economy's neutral rate, indicating tight monetary policy. This persisted until the recession began in December of 2007, marking 1.5 years of economic pressure, just complete 10-year yield treasury sell-off there. But this wasn't the first time the Fed made such a mistake. In the late 1920s, they also kept rates too high for too long, contributing to the onset of the Great Depression. In hindsight, the Fed acknowledged that they should have cut rates sooner. Forward to today, the Fed funds rate has been above the neutral rate for 2 years now. Monetary policy is remaining tight, and the risk of another policy mistake is elevated. Initially, this was necessary to curb the 2022 to 2023 inflation. Now there's a strong evidence that inflation, this persisted. Oh, wow, this thing jumped all over on me. Okay, X is not good for this. Contributing to the onset of the Great Depression, monetary policy remains tight. But now there's strong evidence that inflation is stabilizing. So the Fed's continued restrictive stance is likely a mistake. That's where we were at. Okay. I wanted to point that out because the big thing is that they're doing these rate cuts, guys. But because that 10-year yield, they waited too long, and that 10-year yield is doing its thing. QE Infinity, quantitative easing infinity, said it's funny. The Fed cut rates, but borrowing rates went higher today. Why? Because they're based on the 10-year yield, and it's ripping higher into the close. So mortgage and auto loan rates will be higher tomorrow than they were today. Let's come and talk about that, because the whole big thing about the rate cuts was to add liquidity, but we're actually hearing that 10-year Treasury note, major factor on what loan rates are set at, especially on automobiles and mortgages. And I'm going to look at that economic data and see if we did get a higher mortgage today here in a bit. But is it possible that we get these rate cuts and it really doesn't do anything because they waited so long, that it does all of the bad, nasty movements on the 10-year Treasury yield, and now the 10-year Treasury yield erases any lower loan rates that we might have possibly been getting off of this? Does this send all of that stuff to the upside when we're just sitting here hoping for a lower mortgage and car loan? OC, your thoughts on that?
I think that, I mean, I have a little bit of I don't know, encounter opinion here. We need to talk about
sir, stop. Just stop. I can't have any counter debates on here. Like mine, echo chamber. Stay with the. No, I'm just joking. Go ahead. That's what we're here for, man.
Sir, yes, sir. So there's a difference in those two assets that we talked about, right? One generates profitability. I don't know how does it translate to English, but over time it values higher. For example, your house, right? And the other one, as for example, a car, does not gain value. It depreciates over time, right? So one appreciates, the other one depreciates. So it's a little bit of a different asset that we're talking about here. So here's what I do believe. I believe that we're going to be seeing the results of better credits being, passed down to us. I do think so, but it's not going to go for example, mortgages or any other gaining value asset. We're just going to be seeing it for those depreciating assets, and that is because of how things are happening in the background when we want to talk about assets, right? That being said, for example, housing might not be getting that better refinances, but maybe we can get better car loans or better other consumer or consumerism loans based on this rate hikes. That's what I think, and that is exactly because of what you mentioned. Remember that the bonds are also tied to the economy as well any other appreciated or appreciative um, assets such as housing. So that's what I think. Just to keep things a little bit simple.
No, I like it. I like it. Yeah, and I do agree. We're talking about loan rates here versus growth returns on assets. No, I think that the growth return on the assets that's going to be based on how the sentiment of the economy on the horizon is, right? That's what really moves those markets. But I think a lot of people were really like holding on to buy cars, to buy homes, waiting for this rate cut, and they may not get those loan rates that they're waiting for. So that's what I wanted to point out there. Let's go ahead and jump over to the Bitcoin chart. Let's take a look at that. I'd like to hear what you got to say, and then we'll come back and give a shout out to all the people in the chat because it's my alumni, and I love all of you guys. So let's jump over here, take a look at the chart. That's there we go. There's the one. That's the one. Guys, looking right here, what we're seeing. I did talk about this a little bit this morning. There's a key level, but I do want to show you guys sitting right up here about 65,000. There is the value area high. This is coming off this fixed range volume profile that we have back here, sitting right there, but we have a big node above it, and it's an uphill fight. I just want to show you what we just hit is the beginning of that fight level right there, getting a little wick pull down on it, and we are starting to get a curvature pulling over here on the Oscillator Ribbon Pro. Money flow, though, is coming up. Volume is coming up. True 7 coming up. I think you're actually going to get that True 7. Guys, if we hit a True 7 here where it turns this bright green like that right there, indicating, hey, we've maxed out on all 7 indicators to the upside. If that happens, folks, I think I'm going to have to flip around hard into a short. And if it's around the $64,000 range, it's going to really have to do it. This is why I talked about that $64,000 range earlier on the thumbnail and in the description because of this. Where are you at? Moving averages. Okay. Guys, this level right here, this $64,000 range that we're seeing, this orange line right there, this level has got to be taken back. And I'm going to be showing a full breakdown on this in a minute, but this is going to be where I watch for that rejection. If it can't get above this, then I'm just going to be sitting it out on my cash like I'm doing. Probably closed out some of the stuff that I've made money on because I'm in profit again. And then let it do its thing. Watch for its pullback, probably back down to around 58, 59K, I should say. It's about 59. But if we get above this, it means something for the markets, and I'm going to be explaining all of that to you. So, bro, shorting Bitcoin is what makes the price go up. If you did not have traders, market movers, makers and takers moving back and forth, yeah, it wouldn't drop, but it wouldn't grow either. It takes liquidity, and it is that cycle of people shorting and longing that flushes liquidity back and forth, right? That liquidity is what builds it up. Unless you've got 300 million retail sitting around that are willing to come take a shot at the thing that wrecked people for billions of dollars in 2022 with FTX, Celsius, Voyager, and so on and so forth. Until they come in, you won't get that liquidity to move these markets. That's what moves markets is traders. So yeah, need that liquidity, bro. Got to have it. Sorry, it's the truth. That's how it works. I'd love to stop shorting completely and then get 300 million people to come in and buy Bitcoin, and then I'll just retire on a yacht. But until then, I got to keep trading. Market moves. Let's jump over to your chart, OC, and let's get what you have. We need OC wigs for sale on Piper Market. OC, evidently people think you have the greatest hair on the show. You have the most beautiful hair. Tradefly has the most beautiful face. I have the most beautiful mind. Between the three of us, we make one hell of a team of beautiful people. So let's go ahead and kick this over to UOC and see what you got.
Absolutely. So let's just take a look at my last trade. Yesterday, throughout this movement, I was over the other channel, by the way, to Alexel Crypto, and I was taking some trades along his side, well as he was also taking them. It was pretty fun day. So I'm not gonna mark them there here because it was as we talked about yesterday with my just gambling, just call it that, gambling account, and that was it. Right at this point, we already are into and breaking out of my area here, right? Oh, my shorting area. Why did I never short it here? Because yes, despite we were right there for a shorting here, that was a couple of days ago, and then we have a big body candle going through it, or at least in it. That is not a good signal for shorting. And then I was just waiting for maybe a couple of other reactions, like for example, a little candle here or a negative candle to start dropping back down, but it did not happen. So basically, I have not yet traded this for a short. I want to start looking for where or how high can we go. It seems like we still have a ton of movement maybe left. We're on a key level here. I mean, we have this previous bottom, but then what we're looking at, it is going to be, and let me move my boxing here. Let me just clone this very quickly. Here we go. And then move it out of the way so we can see it. It's going to be a smaller box in here, and we're going to place it at this point because we have some other price action right there. So as you can see, this is going to be my next shorting area. What I'm expecting to see for the upcoming movement will be getting in here, not only because that is my rejection area, but also because we have two vertical lines in here. So going at the top, then it going for the retest, and then making the break out. Also, remember just a quick FOMO information here for you guys. The moon cycle has begun. So if Alex on Crypto is right, we might be seeing that 20% movement. By the way, guys, I do sort of believe on, not just like Piper was mentioning, not because of the moon is out, but because of the moon reaction on humans, right? I mean, it's been proved that when we have full moon, there's more accidents, there are more aggressive people. That's where the word lunatic comes from, right? So we'll see if that make us a little bit more impulsive, and maybe that impulsion will get us all the way back to 73 or something like that. But just take that with a grain of salt, right? At this point, we are seeing previous highs, so be careful at these areas. I'm seeing flattening out of the rebound right here, basically just losing a little bit of steam. And based on that, I would just be waiting for, once again, those reversal signals. If not, I will only be buying back seriously once we get back or we have a retracement. And based on that retracement, we start breaking stuff to the upside. So that's what I'm seeing. But I mean, everything looks fairly bullish on the smaller time frame. So other than that, turning it back to you, Piper.
Yeah, absolutely. Let's jump over and take a look at the heat map here real fast, OC. I just want to show you guys the stock market. I'm just looked over here watching CNBC Pro like I do every morning. Everything's up today. Matter of fact, even crude and Brent is up. Dow, S&P, both at record levels right now. The Dow is up. Russell 2000 is up. The NASDAQ, everything moving up, and they're selling off the 10-year yield. It's continuing to the upside. It's up 3.74. It's up to 3.74% right now. And that's what we were just talking about, is that 10-year yield is pumping up hard. So now we are seeing this occur as a result of that 50 basis points. And that's actually going to create higher loan rates, not lower, even though they cut the rates. It's going to be a little odd, but that's how that works. NVIDIA up 4.12% today. Microsoft up 1.53%. Apple's up 2.78%. Today is the official release of their new iPhone. Amazon's up 1.5. Like, things are looking pretty good. We do have some red on here. P&G, which I told you, this is a recessionary protector, right? This is a place that you go and invest into during recession. Down today now. People selling off and moving back into this higher risk stuff. And that's also being seen with what's going on with the yields. 30-year being sold off, 15-year is being sold off. It's interesting to see. So let's go and take a look at what I'm seeing on some articles here, OC, because I do want to bring that up. Where's it at? Let me go there. There we go. Let's jump over here. There's our new setup. What's up, OC? How you doing over there, bro? We got dormant Bitcoin well stuns Binance with a massive Bitcoin sell. So there are some people that are taking some profits here. According to On-Chain Data Nerd, an analytics account on X social media platform, formerly known as Twitter, there has recently been a large Bitcoin sell initiated by a dormant crypto well. The tweet published by the aforementioned data source says that the last time this well showed any activity was 5 years ago when they bought slightly less than 1,000 Bitcoin on one of the world's largest exchanges, Wobi. Now they have begun selling that Bitcoin on Binance trading platform. He spread the word about that well moving 301 Bitcoin to Binance. This amount of the leading cryptocurrency is worth about $18.57 million. If this Bitcoin gets sold, that well will make a realized profit of $15.4 million. So some people are taking some profits here. I just wanted to bring that up. And then about those rate cuts. Legendary trader John Bollinger, I think it's Bollinger. They call it Bollinger Bands, but his name is John Bollinger, I believe. Let me know in the chat. Somebody in the chat knows. I know they do. Look at here. Legendary trader John Bollinger breaks silence on the Fed rate cut. I bet it's going to be BC Port Corp that knows. That man's a smart dude. So is Crux. Yesterday, the Federal Reserve made a significant move by cutting the Fed rates by 50 basis points. We know this. They pointed to a sustained economic growth despite Ballsy bang. Okay, there we go. Despite slower job creation and a slight rise in the unemployment rate. Okay, inflation though still above the target has been moving closer to the Fed's 2% goal. In response to this major cut, markets saw a positive reaction. Yes, we have, with particular growth noted in the cryptocurrency sector. Investors are closely watching the Fed's next steps as the central bank continues to assess economic data and risk before considering adjustments to further interest rates. So, what did John Bollinger say? One noteworthy reaction came from financial analyst John Bollinger, best known for creating the Bollinger Bands trading indicator, as market participants weighed the implications of the rate cut. Bollinger nailed it every time. I'm just going to say I nailed it. This guy acknowledged the statement that the rate adjustment should be viewed as a return to normalcy rather than just a simple easing of monetary policy. So he thinks that this is just a normalcy thing. This should not be taken as anything other than the next step that should be taken by the Fed. On the other hand, it is now logical to assume that after fixing longs, there should be no reason for a fall. We leave geopolitics aside. It's an eternal black swan flying somewhere nearby. The main risk here is that the NASDAQ and the S&P 500, which never had a normal correction, and if people decide to fix blue chips now, Bitcoin may go much lower. Keep that in mind. Powell, by the way, was asked directly whether there will be a recession, as often happens at the start of lowering rates, to which he answered quite unambiguously, there's no signs of recessions right now. So let's talk about this. Bollinger thinks that if there is a correction, if we get a normal correction on the S&P, Bitcoin could be poised to go much lower right now because people are in such profit and they're seeing this coming. There is typically a recession, even though Powell said no signs of it right now. They did say that inflation rates are coming down, but I think we're all still feeling inflation dramatically, especially on things like auto insurance. Auto insurance is up 17% in the past quarter. That's not a small amount. So obviously there's still inflation out there. And a lot of people think that, hey, 50% of the time, just so you guys know, 50% of the time, shout out to Meet Kevin. He's the one that pointed this out. I went and did my research on it. He is correct. 50% of the time when we have a 50 basis point rate cut right off the gate, we have a recession. So flip a coin. Heads or tails, there's going to be a recession. That's really what we're seeing right now. But Bollinger thinks that if we do have the correction that takes place because people are taking profits, we haven't had the correction yet on the stock markets, that we could see Bitcoin have quite the slide. Your thoughts on that, OC, and what are you thinking happens with this right now?
I think that he's onto something, right? I mean, we cannot deny his path and what he knows, and of course, the studies that he's got, right? Sorry about that. The thing is that S&P 500 and Bitcoin are not made equal. And despite I know exactly which of those is the bubble, we still run on whatever I believe it is the bubble, right? So economy will thrive or will make it thrive or sink a little bit. Talking about the S&P 500, right? But what about Bitcoin? Well, if we are not driving, which we know, which we are not driving on Bitcoin, well then Bitcoin, it is a risky asset and it is not that important for the economy. Who is holding Bitcoin is us believers, and also well, at this point, a little bit I would say of the institutional money because of the ETF as a risk investment. So of course that if we see a correction on the S&P, we're going to be seeing a much higher correction on Bitcoin. But also, as every other time, I believe that we're going to be seeing Bitcoin getting back at its feet much faster and recuperating value faster than the S&P will, getting at previous highs in a less amount of time. And that also has to do with the economy not running on Bitcoin. Therefore, Bitcoin can be leading its own way just by us injecting that money. I mean, it is not a secret that with the rate hikes, with a little bit of time in a smaller time frame, we're going to be seeing that money migrating from the benefits of getting cheaper money to risky investments, therefore migrating that value over to Bitcoin. That doesn't mean Bitcoin is going to hold. It only means that we are on our path to normalize Bitcoin as part of the economy. But yeah, I mean, I would only argue about there's no signs of depressions, and that is just, I think, because he needs to guide himself with the economy rules. And who sets that rules? Well, then at this point, Powell, or it is setting them, right?
Well, I think job numbers are going to be because it's going to if we do have a recession. I want to lay something out here that these are the indicators that you should watch because if it happens, it's gonna happen slowly and then all at once, and it's going to be all of a sudden these profits and earnings reports don't come in as well as people think they should. And then this starts to sell off. And then these companies are showing less profit, which means that at that point they start to go, okay, we lost a lot of money this month. We got to cut some jobs. And then all of a sudden it's more jobs and more jobs and more jobs. So it will happen slowly and then all at once. That will be what we will see if it does happen. So that's what I'm watching. I'm watching when I start to see 6,000 people laid off here, 1,000 people there, and it's like happening within a day or two of each other. That's that trickle effect of the recession coming, right? I do want to finish this up on this article here. OC, let's jump back over here. Nope, that one. There we go. On the other hand, this is a continuation of that article talk about there's not a sign of a recession. On the other hand, the maximum drawdown for the S&P 500 1 year after the Fed's rapid contraction cycle, that's 50 basis points out the gate. It begins when it begins, it's about a minus 20% on the S&P. And the average maximum drawdown 1 year later, when you have a slowing contraction cycle, is about negative 7.4%. So you can see the sharp pullback, but then it slowly starts to come up over the next year. So if we do get that, keep that in mind. 20% on the S&P right out the gate, but on average 7.5%, we'll call it, is what we see over that whole year. And then if that's the case, then that would mean a lower Bitcoin because obviously Bitcoin is a higher risk asset to a majority of people than what the S&P is. So I just wanted to finish that up and talk about that because those numbers are relevant. OC, I know you got that list going right here. We're going to try to get through as many of those as possible because, guys, we got through all the news. We got through all the news. We're good today on that. I want to It says, I don't understand, Piper, how when money is cheaper to borrow and people are spending more, will they cut jobs? Because money's not cheaper to borrow, average crypto Joe. I just talked about that. The 10-year yield is actually going up, and that's really what they look at. So put this in perspective. Yes, it's cheaper for the banks to borrow money, but the 10-year yield is how they're going to pay for that loan, right? And so they're going to put that money into a yield that's going to pay them money, and then they're going to go, okay, so if I wanted to give a loan to French Toaster for the next 10 years, he's going to pay me this amount of money, and this is the 10-year yield. The 10-year yield is going up. That means they're offering more interest rates, okay? Higher interest on it. If I'm going to give a loan to French Toaster for 10 years or put my money in the 10-year yield for 10 years, I have got to make sure that I'm getting a little bit higher from French Toaster for a yield rate, an APR, than what I would from that 10-year yield. So just arbitrary number. Let's say the 10-year yield right now is 6%. Okay. I could put money over there from my bank, and that's going to give me a 6% return as a bank. I've got to give French Toaster a higher interest rate than 6% because he has risk. A 10-year treasury bill yield does not have any risk. So I've got to count his risk on top of that. Therefore, the 10-year yields rate is what decides the rate that I'm going to use as my baseline before I add the risk level for French Toaster on top of that, because he's high risk. 10-year yields not. So the 10-year yields are actually ripping up because of the 50 basis points. So because rate cuts happened does not mean that your loan rates are going to be any cheaper. It is not going to be cheaper to borrow money. It's actually going to go up. So that's not the case, just so that you understand. I hope that explained the question that you were asking. You said honest question. Yeah. I don't understand, Piper, how when money is cheaper to borrow. Yeah. So it's not cheaper to borrow. The rates are coming down, but that 10-year yield is going up, and that 10-year yield is the basis of how expensive a loan is going to be. And so until that flips over, then we don't have lower rates coming. We actually have higher rates coming. So if this isn't making sense to people, it's because the system is broken. The money is broken. Facts. Oh my God. Amy Lives Crypto. I love you. And that is the most valid statement ever. It is broken. I know it's hard to understand, but I'm trying to explain it as best I can so that people can get knowledge and information, right? Break it down Barney style, as we said in the Army. So cool. Thank you. You understand. Awesome. Yeah. That 10-year yield going up is what they're going to base that on. So, it took me a long time to understand that too. So don't feel bad. It was very difficult for me to wrap my brain around what this rate over here. What does it have to do with this rate? Oh, if the bank can take, oh, you want $10,000? Well, I can put $10,000 over here and make this money. I'm going to charge you extra because you're a risk. And I was like, okay, got it. This makes total sense. So there you go. OC, let's go take a look at this chart on Bitcoin because I want people to understand why that $64,000 range is so critical. And we are coming up on it right now. So let me jump over to this chart. Let's talk about this. That it's the 200-day moving average. And I've showed this before in here, guys, but you guys need to understand how important 64,000 is, because if we look here, this is the first cycle of Bitcoin. The orange line on here is the 200-day simple moving average. You can see the halving that occurred here. Guys, we stayed above it. It was our support until the cycle top happened, and then we went down. It became our resistance all the way through until we bottomed right down here, right? We get back above it. It is our support. There's the halving event again. It is our support all the way up through, and we're riding. It is our guiding light. Up we go, right? We get to the top, then we come below it. It's now resistance until we get to the bottom. We got back above it here. This is looking at 2020. We got back above it here, and we did have this little recessionary period right here in that 2019, 2020 area, okay? We got up and then pulled back below it, and this was pre-halving. We had a little recessionary period there, and then we had the black swan event of the pandemic. We get into our halving. And what happens again? It's our guiding light. We did not lose it until up here when we had the double top here. We got below it for the summer. That was in May. Go away, right? Everyone talked about that last cycle. You can see here we held it pretty good. There was a wick below it, but the next week went right back up in, and then you had this 3-week period here after the top that we held, and then underneath resistance again. Going in, support, little breakdown here below it, but you can see that it did not really ever get a downward motion. It just kind of went sideways right there. We get back above it, have an event. Guys, we tried to hold it here. We got rejected, and now we are underneath it. In order for us to do a bull market continuation, we have got to do what we've always done, and that is ride that guiding light like a wave. Shout out to Lunar Beaches to the upside. This 200-day simple moving average must be retaken. And when I look at the smaller time frame chart, guys, that's right here at 64,000. It's not that far away. I think if we're going to get a rejection, it's going to happen there. If we do get a push above this, because let's take this to the daily and just show you how close this is. If we do get a punch above this, there's a value area high sitting right here coming in line with this channel. If I turn all this other stuff off and we just look at only the channel, guys, turn off the moving averages. Thank you. This channel has been our downward channel. It is a bullish channel, so this could be, we break 64, we break this, and now, boom, bullish breakout on this. But if we get rejection, guys, we're looking at least 57,000 here. That's the median of this channel. Downside on this, guys, is about 49K, and that's a level I've talked about a lot. So we've got to get through that $64,000 range. That's the 200-day simple moving average, and then we've got to break above this level at about 65.5, 66K, which would be a breakout of this long-running channel going all the way back to March right there. Something I want to show you guys on this beautiful channel. Nope, it's not this channel. It's another channel. Never mind. Disregard. It was another channel on another asset that I was looking at yesterday during AMA time. So thought I had one more thing on that. I do not. But you know what I do have? I got OC. Let's kick it over to him, see what he's seeing, and let's get these altcoins knocked out, OC.
Absolutely. Let me get started with one of my favorites, and not because I like it, but because I need to have it. And also, it represents at this point one of the largest brokers in crypto. It's Binance, right? BNB. So Binance holding off for the hero licensing until Gambrain is freed. So basically, just waiting for a monetary policy, whether because they don't want to stick to it. So just give it a read to this article. It's it's pretty intense at this point, and that is because we're just breaking out. So just be careful with BNB because we are between a hard place and a rock, right? So at this point, we are breaking out, but we start seeing some reversal signals in here. This will mostly move with along Binance, along Bitcoin, if Bitcoin have a big movement. But if Bitcoin just keeps doing what it's doing, basically just reacting to the markets, and they go with Nigeria, well, then we have another port opening for crypto, right? So we could be seeing that retracement and a big movement as we've been seeing for Binance. Binance has not been, weak throughout this whole market situation. It's just kind of like it keeps going up, right? So just keep your eyes on Binance. I think it's going to be a great investment if they get into the Nigerian markets. And that is because it's one more achievement for Bitcoin. I mean, it hurts me to see that Binance is the one doing it, leading that spearhead. But still, somebody need to do it, and it's taking the lead, right? Let me just bring out a couple of support and resistances here. We have all of the reactors here. We got the nuclear zone right below. So we could be seeing that maybe retrace and then continuation. It makes total sense for those reactors to come up, make some confluence right here at this area where we are, that we're seeing for a long time. And let's see what else we got in the way. So let's take a look at the equilibrium and premium zone. Premium zone, I'll be just looking at for the target for after we break out this channel and retest. So basically going all the way to 603. Let's take a look at something that I really like. There we go. This is a volume profile magnifier. This is order blocks or X-rate order blocks by Jacob Maccabee. One of my favorite indicators to look where all the way where it could be going up or all the way where we could be going downwards, right? So basically, those are my impossible targets. They play very nice. This is
OC,
my
where can
configuration.
people?
Yep.
OC, where can people get that indicator? Because that's a free indicator, correct?
That is a free indicator. Yes,
Yeah,
that is a free indicator. You just need to go to indicators tab all the way here and then just type either Jacob Maccabee or volume profile but you need to not mistype it. Volume profile bar magnifier, and there you got it. Where is it? Sorry. Order block. Yeah, this is it by Jacob. Order blocks. I think. Yeah, this is it. Just look for this full name and you'll have it. If not, I'll be sharing the link on how to just add it to your favorites here after my analysis. But as you can see, we're again aiming at previous highs, previous highs, previous highs, the same area where we have the support, sorry, the premium areas. Also, to add to it, we have a liquidity area here. So that really, really tells me that if we are able to break out retest and then have a positive candle, this is going to be the major target. Let me try it back to you, Piper. In the meantime, I'm going to get just a link for this indicator and then share it here in the chat.
Awesome. That sounds great. I'm going to pull up Casper. We had a request for that. I haven't looked at the list yet, guys. But Casper getting a move here on the 4-hour. We did get a bounce off the 100-day simple moving average. We got our rejection back here on Sunday, okay, off of the phase 9 golden pocket. We didn't really talk about Casper much this week, even though they had the stuff. I guess we did Monday morning, but I was watching for us to come back down. I want to get rid of all the Mexican spaghetti here from over the weekend. There we go. I was watching here over the weekend on this, and I was like, okay, we're probably going to get back down to my resistance range here. We did right here on Monday afternoon. That was what we bounced off of, and then we have pulled back up, retested that. Guys, this should, if Bitcoin continues up, if Bitcoin can get to that 64,000 and make its way up there, we should be looking at the phase 9 golden pocket at 17.8 cents again. This has been a key little level here in the past history. You can see right there, lots of support and resistance on this thing. So I am watching for that to happen. If it doesn't, again, guys, that range below us, 16.5 cents to 16.1 cents is our support range below us. Might be another good opportunity to get in there on Caspa. And then I'm not sure what else we had on that list. I'll look at it and we'll come back around to it. OC, did you drop that link? You did. Perfect. Let's kick it back over to you. See what you got there. We got about 10 minutes, 11 minutes to run through the rest of these alts, as many as we can, and let's knock them out.
Perfect. Let's take a look at Pepe, because yesterday I was looking at a possible retracement before I jump into
a family show. This is a family show. Family show. Sorry, Amy Liz Crypto. I apologize.
I'm a little bit what? I'm
you said
confused.
let's look at Pepe.
Oh. All right. All right. Taking a look at this asset, let's just leave it like that. We were rejected from the zero lining here, so I was expecting a little bit more downwards in here. Despite that, we did bounce between those two order blocks. I did expect them to break down then for recuperation, but did not happen. Then what happened? We broke back above. Basically, my entry was right here at this area as we were breaking through the zero lining here. Was it a late entry? Yes. Was it running after the price? Yes. Was it just a 5-minute straight? Also, yes. So just be careful. I did enter on the retracement. Let's take a look at it at the 5 minutes, what I was looking at it, and the 1 minute and 5 minutes. Here we go. We got the breakout, a little bit of a retracement, what I was jumping back in, and I did not jump in until I had also a movement to the upside, which was this one right here. No, sorry, this one right here, breaking back above and having the money flow jumping back in. So it was right there, my entry. At this point, I already have taken profits. I took profits somewhere around this area after the next pump Here we go, and that's where I'm standing at this point. I have only a something like a 10 to 20% in from my original position. Let's go to the 4 hour. And where or what we could be looking at, well, we are on a rejection area here. Delta is negative. We're kind of like losing some momentum. We could also be making a little of a goose head, which at this point it's uncertain. So I'll be maybe waiting a little bit more. And the only thing I would be just careful is just getting all the way here and trying to short this area. So if you're planning to short it, well, then wait for a couple confirmation candles, maybe a couple of those going to the downside, and then also turning back around on the oscillator. Sorry. Wait for the flip of the ribbon right there. So other than that, turning it back to you, Piper.
All right, let's take a look at Soul Train. Shout out to Tradefly. I think he's in the chat listening right now, driving back home from his job. So, guys, Soul right now coming in on the 50-day simple moving average. We had this level of resistance back here, this trend that we thought we were going to reject on, but when Bitcoin got its move to the upside, we got a break in on it. We're now back into this triangle here that it was trading in for a long time as mainstream average, like a median of support resistance triangle here. Guys, if we continue up, I'm going to be watching right here, $144. This is the 50. And you guys know I talk about this all the time. These sequence numbers are good here on the Fibonacci's because we did get all of our bounces on the golden pocket, played out beautifully. But if we reject underneath the 50, that's typically very bearish. If we get above that 50, guys, we could be looking at $150 range here coming in on the top of this triangle. And then we have its 200-day coming in right there. But if it takes a little bit of time, if we come back and retest this and then it comes in, this 100-day could be moving in right there on that $144 range too. Looking at the oscillators, I do see that money flow is coming up. True 7 is coming up. Volume is coming up. We did have a bullish divergence. We had a peak seeker, an uptrend, everything printed off here. We are getting a little bit overbought right now, but there is a lot more indicators down here screaming upside movement continuation. So, yeah, looking pretty good on Solana as long as we can take this 50-day simple moving average, I should say, and this 50% fib right there. So, OC, back to you.
Absolutely. Let me take a look at Popcat. This is the very first time that I take a look at Popcat since we don't have that much history on Binance at Perpetual. So let me go into maybe the 2 hour here. That'll give us a little bit more to play with. So at this point, we had the goose head. Basically, the goose head played out beautifully right here. This was your goose head indicator. As you can see, we have that next movement. Usually that goose head indicates a last push right before a moving downwards. Something to note is that we are building up, or we did build up this order blocking here, right? What is that telling us? We are bullish on Delta. We have big disparity here. So it means that we could be going back down for a healthy retracement. And if we are able to pull back up, so pull up, well, then we're going to get back on track right there. So Popcat looking pretty good, to be honest. But we need to wait for that retracement and wait for this area for support. At this point, if you're trying to short it, I'll better not as a financial advice, I'll rather go with a late shorting here as we are losing this area at this point, and maybe as we're going through the cloud, so the red cloud in here, just to make sure that I have enough momentum to maybe even go farther below the zero line, and I can move quickly to the dynamic reactor here. If I start turning on a couple of other stuff that I can have, well, then we have a big change of character here. Nothing too awful, but also right here, and this is the one interesting, we just generated a new set of predictive ranges. So the theory tells me that we should be going for the blue one, so crossing the blue one right here. Once again, if we find support or find supporting here, well, then that might be just completing the circle of my analysis, going for the next target at 0.96. So I would say just wait. Again, not financial advice. It is your money. You have the ultimate decision. But on my point of view, I just wait for either bounce or rejection or going through this area of support. Other than that, turn it back to you, Piper.
Awesome. Yeah, Popcat, that is an FD White trade all day long. He trades that thing like a boss. He's made quite a bit of money on it. So, yeah, he'll be talking about that today. This afternoon will be 4 p.m. Eastern Standard Time. It's Trade Academy with FD White and I. So he'll be on here talking about Popcat, I'm sure. Looking here, guys, at what's going on with Chainlink. Hold on, please. Got to gear up for this. Got to put on my pro gear. There we go. Looking at Chainlink, guys, we did get a pullback here yesterday morning with that little shakeout. People were getting scared. Like, what's going to happen today? FOMC, they were bracing. And then all of a sudden, bam, popped up here in its platinum pocket. Look at this platinum pocket. It has been key areas here that we've gotten over and over and over again for support on Chainlink. Right now, we're back in this resistance box that I talked to you guys about. What is this resistance box based on? Well, we can go back here and look. It's all this price action in this volume node right there. Keeping an eye on that level, guys. Upside of this right now is about $11.67. If we bring this in and we look at this on the daily, you'll see that we do have the 100-day simple moving averages also out here above us too. So watch that $11.67. If we break through that, you're going to have the 100-day. You can simply just put moving average on your charts, and then it's called the moving average ribbon. So if you just do like MA ribbon, you guys will see this right here. It's going to be under technicals, not the community ones. That is that one. I have my my moving averages if you want to throw them on. It's SMAs, the 50, the 100, the 200, 300, made them green, yellow, orange, red. And then you can have those to watch also and see how those are going to play out. But those are the levels right now. It's about $12 on that 100-day. The upside of that resistance box is about $11.67. So lots of resistance sitting above us right now on Chainlink. But again, at the end of the day, guys, everything is going to be dependent upon this moving average, which is right here. We are danger close on this moving average of the 200-day. I'm going to be keeping an eye on that one because that is where I do think that we could get a rejection here on what we're seeing with Bitcoin. That would be $64,000 range right now, psychological number, and a critical moving average to get above. So keep all of that in mind, guys. We are pretty much through everything right now. I do want to give a shout out to Eric Wallen. He asked, do I talk to Gypsy screaming at her like a general or with the sweet voice? No, I talk to her calmly. We don't want to excite her for anything that doesn't need to be exciting, right? We'll tell a good girl and stuff like that. But no, we do not try to talk to her in a certain. You got to save those. Just training mechanisms, right? So just like you don't yell at your kids for everything that they do wrong, you save that for the really bad things that they do wrong, right? So don't have to be a general with everybody. Even soldiers respond a lot better to positive reinforcement and corrective training than they do just getting yelled at. So all right. OC, I think that's all we got time for today. We're going to be live this afternoon at 4 p.m. Eastern Standard Time with Trade Academy. Then we get Crypto Nightcap tonight. And then tomorrow morning, we get Good Morning Crypto at 5:30 a.m. my time, I believe it is, which is like, or maybe it's 4:30 a.m. my time. I don't know. On the East Coast, it's early. It's like 7:30 in the morning or 6:30 in the morning. You guys got to watch it. BC Port Court, put the time in the chat. I never get your time right, man. I'm sorry. And then we'll be back here for the Friday market close for the week, last day of the trading before we get into the weekend. But OC, what do you got for the people on the way out, bro?
Oh man, I don't know. I think it's a great Thursday. It started to taste like Friday, especially with this beautiful sweet market. So guys, thank you so much for joining today. A quick reminder to smash that like button. So because if you do, well then that little port on your fridge is going to start opening and maybe you start seeing a couple of beers popping up on this early Friday. I don't know. I'm not telling anybody to drink early, but I'm surely gonna be just waiting for that Friday to start celebrating Bitcoin's move. it played out nicely. So do not miss that chance for your beer to be popping onto your fridge. Click that like button and let me know if that worked.
Awesome. Guys, we will be back here tomorrow morning. Catch on those episodes we just talked about. You guys got to come see them all. And until then, watch that $64,000 level. It's coming in 200-day simple moving average. Critical area to get above. It is what has always been our support every bull run, and we are beneath it. We've lost it for the first time ever in Bitcoin's history. So a 4-year cycle already changed. There you go. Hopefully we can get above that, guys, and continue on. My 1.25 Bitcoin would appreciate a higher price on that. And my cash, it's ready just in case it's not. So guys, be safe, be prepared out there, trade safe, and remember, use a stop loss. We'll catch you guys later. Thanks.
I don't know what they keep telling me. I don't know what they keep telling me. Ain't no school like Piper Academy. Ain't no school like Piper Academy. We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling out the wheels flow low. I know you hungry for knowledge, that's profit appetite. Classes in session, this for the Army Piper acolytes. Trade flag at the soul, train ready. What a line from OCI, former Mexican spaghetti. Yo, crunch crypto with a deep dive to reject dime. And if you like the visual powered by Chart Prime, then you will part of that alumni, that's all spine. But if you have step, fall back to offline. We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling out the wheels flow low. Sound off.
To get with them, the ZTS rhythm. Alexandra.
Yeah, that's my alumni, you know what I mean?
That was awesome, dude.